Ladies and gentlemen, welcome to the Knowledge Group webcast, Procurement's Return on Compliance, What It Takes and What It's Worth to Implement Compliant Procurement. I'm Sal Giangrasso, your moderator for today's event, and we are going to get right to our speakers. However, I would like to point out that on the next few pages, you'll find useful information regarding some of the mechanics of today's webcast, as well as the participants and company information. Please feel free to review these pages and refer to the Frequently Asked Questions tab to the right for answers to the most commonly asked questions. I would like to take a moment to thank our participating sponsor, Zycus Incorporated, and partner firm Belden Incorporated. Please feel free to visit their respective websites for more information. On today's webcast, we have the following speakers forming our panel. Afzal Nasser, Vice President of Global Procurement, Belden Incorporated. Af Nasser is the Vice President of Global Procurement for Belden that designs, manufactures, and markets signal transmission solutions worldwide. In his current word, Af is responsible for strategic sourcing on over $400 million of indirect spend worldwide. I should say indirect spend worldwide, pardon me. Joining him on the panel, Richard Waugh, Vice President, Corporate Development, Zycus Incorporated. As the Vice President for Corporate Development, Richard leads strategic initiatives in the areas of new product introduction, market development, thought leadership, analyst relations, and strategic partner development programs. Richard has an extensive background in B2B e-commerce. And at this time, I would like to thank these speakers. They've been very generous with their help and support preparing for this event. Speakers, remember, to advance your slides, please say next slide at the end of each page of your presentation. So we have until about 2:45, 2:50 Eastern Time to present. So I'm turning the conference over now to Af Nasser and Richard Waugh. Gentlemen, please proceed, and let's turn to page 9 to begin.
Thanks very much, Sal. Richard here. Just a quick word from your sponsor. Zycus is a source-to-pay suite of integrated software modules that cover from spend analytics through sourcing, contract and supplier management, procure-to-pay, and financial savings management. And it's been recognized consistently as a leader by third-party analyst firms such as Gartner in their Magic Quadrant, recognized as leaders in the last 3 iterations of that Magic Quadrant report for suite vendors. So that's just a little bit of context about Zycus. Next slide, please. One of the things that Zycus does is participates actively in this type of a thought leadership session, and just wanted to also mention to the folks tuning in today, we'll have our annual conference coming up a little bit later this year at the end of October outside of Washington, D.C. in Leesburg, Virginia, which would be another opportunity to meet and discuss key topics in the procurement lexicon with experts such as the guest I'm pleased to be joined with by today, Af Nasser from Belden. Next slide. So the agenda for today, and again our topic, procurement's return on compliance and what it takes and what it's worth to implement compliant procurement. So first let's talk about the compliance landscape and the many different facets, whether that's spend, regulatory process, contract, supplier, or social and sustainable. And I'll explain what we mean by each of those areas, but then we'll really get into, and I'll draw heavily upon Af's expertise to really think about what are some of the best practices for implementing a compliant procurement organization, and how does your organization stack up against the industry overall? How compliant is your organization when you benchmark against what best-in-class organizations are achieving? And finally, we'll really come back to the core thesis here is that there's a financial argument for compliance. So it's one of the things that most organizations have as a stated objective. How do we become more compliant in our procurement practices? But in addition to that, there's sort of the financial objective of what's the return on investment from making these type of efforts towards a compliant procurement organization. So that's the agenda. Next slide, please. So let's start with a model for at least some of the facets that comprise compliant procurement in the center here. And we look at things like spend. And And I would postulate that even within a single facet, there are multiple facets within something like spend, for example. So we're going to talk about compliance, spend compliance from an accounting standpoint. Are spend transactions properly coded and classified? From a policy standpoint, are purchases made with the approved contracted suppliers? And from a spend management standpoint, how much of that spend is the procurement function able to influence or control directly? And then we'll talk about regulatory, so a little bit more of an external focus, whereas that spend compliance is kind of how we're doing within our organization to really keep tabs on what we're spending. From a regulatory standpoint, it's external, whether they be industry regulators or regulations or auditors. We'll look then at process and maybe the 3 Ps of process compliance, if you will. Number one, are we buying from prescribed or through the prescribed buy pay channels? Does it follow the proper approval workflow and the preferred method, as in, is the process being conducted in a digital or electronic fashion versus a paper-based process? We'll move on to contract compliance. From a legal standpoint, do we have the protections in place? From a performance standpoint, are suppliers achieving service level agreements, performance obligations, complying with pricing terms and conditions? We'll then look at suppliers, and we're increasingly reliant on suppliers in many of our businesses, where we've kind of taken a strategy to focus on core competence and rely on suppliers to bring us a lot of the certainly technology innovations and those kinds of things, and that can introduce risk. So making sure that suppliers are complying with all the appropriate regulations, certifications, and those kinds of things. We'll examine that. And then finally, we'll look at the whole area of social and sustainable. How is procurement enabling the achievement of overarching corporate goals for corporate social responsibility and sustainability? So a lot on our plate here, Af. At this point, I'd like to ask you to reflect on these different facets of procurement compliance. Which do you focus on at Belden? Are there any in particular that are really important to you, or maybe some others that I haven't even mentioned yet that are worthy of consideration?
Sure. Thanks, Richard. We at Belden focus on all of the topics, some more so than others, and I'll kind of go in the clockwork fashion that you went. From a spend perspective, this is very important to our organization. It's important to many organizations, right? We want to make sure that we're most efficient, we're gathering the most value at our organization. And Belden early in its development of a systematic approach to managing spend. Right now, we are on Ferret systems, and we've automated that process a lot better at spend visibility. You can't really do category management strategically if you're operating in a disparate environment. So we're really heavily focused on understanding where we're purchasing things, what are the opportunities from a global contract perspective, the opportunities for developing partnerships and expanding partnerships with suppliers, what are the ideas we need to do, and what are the things that we need to do to make sure that we're leveraging off of all of the different opportunities. And you don't get that information, that strategy, unless you really understand your spend profile. Most manufacturing folks focus on things such as making sure that we don't have suppliers in North Korea, have suppliers that have supply chain in North Korea. We have OSHA compliance, we have code of conduct, and we have GDPR, which we'll talk about, or I think later in the slide, that are really hot topics that we need to manage through with the new regulatory compliance requirements. Again, from a process standpoint, pretty early in our journey. There are some things that, like making sure that all of our contracts are signed by the right people in the organization, making sure legal reviews those contracts, making sure they have a say in those statement of work of that nature. We're not as advanced as I'd like to be in that journey, and we know what needs to happen, and we're implementing the right solutions and systems to get there. From a contract standpoint, that kind of leads into that process. Just want to make sure that we are getting approval before we're putting our company at risk or in a liability. And from a supplier enablement perspective or supplier management perspective, it's less critical for us on the indirect side to really impact our revenue stream. There are certain suppliers, especially from a 3PL perspective, to make sure our meeting levels, but that's focused on the direct side. And then from a sustainable perspective, do focus on products that are sustainable. So, for example, one of our business units in New Jersey, Alpha Wire, they have invested called EcoWire, just a little bit more of a product that is eco and less impactful on our environment, because we do believe that sustainability and producing the right way for our society is an important way to work in our country.
In terms of really coming to the table with some best practices to share for how to think about and get our heads around compliance real effectively. So what I'd propose, now that we've got the model established and established the fact that, boy, we got an awful lot on our plates here, let's delve into each area and drill down a little bit more specifically. So the next slide will start with spend and kind of think about kind of what are some of the challenges and what are some best practices to overcome those challenges. So I'll start with a problem statement here. I got some data that comes from the Hackett Group that's pretty revealing. There's this significant disparity between top performers, which are typically just the top 20% of organizations, and the peer group, which is everyone else, the average overall. And the top performers have been able to establish line item spend visibility on nearly 100%, 99% of their spend, versus the peer group that's lagging well behind, only slightly better than a third of the spend, 38%, that they have line item visibility. So there must be some significant differences that account for this kind of disparity. And some of the best practices in this area really relate back to a disciplined approach to procure to pay at the beginning, because after all, not having spend visibility means that transactions have not been accurately coded or classified at the point of inception. And that's often because, and Af, you already mentioned it, differences from a supplier standpoint between direct and indirect. Often we're talking about indirect materials here where end users are driving the demand, creating the requisitions, and end users are responsible for applying the correct GL codes and commodity codes to create that spend visibility. Well, what's enabling these top-performing organizations are some best practices around procure to pay. Number one, using AI, so artificial as opposed to natural intelligence, to assign the correct category GL and budget codes. And after all, end users are not procurement professionals, and they're not necessarily motivated to apply a lot of discipline in deriving the correct coding and classification. So this is where technology can apply that artificial intelligence. So at this point, again, Af, I'd like to get your perspective. When it comes to getting accurate spend data, what challenges have you faced in ensuring that transactions are accurately coded and classified in the first place?
So Richard, as I was saying, I think one of the things that I had fortunate visibility to is I used to work in finance for a lot of my career, and I noticed that when people were purchasing things, they would have account codes and function codes that have been used historically, and as long as that function and account code worked, they would just apply whatever requisition they needed to those accounts because they knew it worked. And I think a lot of organizations in the past, they have a similar concept. They don't really understand the requirements or the need. If you don't really have a centralized procurement organization, there may not be value in making sure that these codes get applied correctly. But when you do have and get into a position where you're trying to leverage your spend and manage categories, if you don't have a systematic way, or if you don't have an artificial intelligence, or if you don't have an easy way for your end users to code things correctly, it's most likely not going to happen because people don't necessarily see the value because it's not part of your day-to-day. But it's not necessarily going to be intuitive enough for you to do a category or use that information to do category management. So as we've gone through this journey, those are kind of the challenges that we face.
Thanks for that explanation and perspective, Af. And I guess, thinking about what do the top performers have as an asset in this data if they got 99% versus 38%? What's the strategic value from a procurement standpoint of getting that kind of spend visibility?
Yeah, I think it's between tactically negotiating and procuring versus strategically negotiating. So what I mean by that is we have a lot. I'll give you a simple example. We have a lot of different copy machines or multifunctional device printers out in the organization. And if you don't have a system to manage the category, what you end up doing is you start having these conversations with all the different business units. You have onesie-twosie conversations. Contracts are up. You'll slowly and hopefully catch when they're up for renewal to negotiate better terms. Whereas if you had a system and you saw the category, you saw the folio, you'd be able to have one conversation with your legal team, with your business owners, your supplier, let them know what your needs and requirements are. Develop a contract that makes sense for your organization, and then also understand what other products that your supplier is able to provide, and see if there are other categories that they can manage in that space. So what that helps is it develops a better lean approach, right? You're not having a legal team review. You're not having conversations every 3 months on a similar topic. Right? You're not wasting their times. And then you're just developing a strategy with your supplier and a relationship with your supplier to figure out other things they can do for your organization. And they're more apt to help focus on these tactical stuff. They're figuring out, what are you guys really doing? How do we get you there? And it's just a different type of conversation.
Great insights, Af, on how data visibility can really drive strategy. So
to go to that, let's do our first secret word so I don't have to interrupt you. Supplier is secret word number 1, SUPPLIER, supplier. Secret word 1, if you're seeking continuing education credit, please jot down supplier as the first secret word. Sorry to interrupt you, Richard. Please go ahead.
No worries. Next slide, I just wanted to kind of give a little quick demo on kind of some of the challenges from a spend data classification and how technologies such as artificial intelligence can really address the underlying challenges. So, at the top here, you've got a series of transactions, and some have complete item descriptions, some have rather cryptic item descriptions, and you may even have different languages mixed in. Some have material group codes applied. In some cases, they're missing. But the thing that artificial intelligence can really drive here is to identify the various cues in that data, or clues, if you will, keywords in the item description, supplier name, the material group codes, and triangulate across all these factors. And at the end of the day, in this case, although it wouldn't have been immediately obvious from the data, at a line item level, all of these transactions are in fact for the same category of notebook computers. So just a further illustration of how artificial intelligence can really help both in terms of the initial categorization and classification at the requisitioning step, and in the ongoing cleansing and enrichment of spend data. So next slide, please. I said at the outset, when we look at spend, it's also not just about the accuracy of the data and how it's accounted for, but how effectively are you managing the spend. And here's a model that comes from Hackett Group that looks at sort of an average procurement organization that has about 55% of spend that's directly influenced or managed by procurement. And for the top performers, that may approach 75 or 80%, but it's never 100% for every organization. So there's always going to be some categories of spend, especially tail spend, that don't really warrant procurement influence or control over those categories. So what's emerging are some new models that really put more of the power in the hands of stakeholders and end users, because procurement simply can't effectively manage 100% of spend across the organization. So again, Af, I'd like to get your perspective and drill down a little bit in your situation at Belden. What percentage of spending would you say is influenced by the centralized procurement or sourcing role, and has that been on the increase or on the decrease in your case?
Yeah, I would say, our journey started about 3 years ago, and we probably had 5 to 10 at that time. I would say that, we probably have closer to 30% right now, and I think by the end of second quarter next year, we'll probably have closer to 50 to 55%. It really is contingent on making sure that you have a systematic approach, system that can help you get there.
Yeah, absolutely. And again, for every organization, you're on a journey. It's certainly trending upward in terms of the amount of spend that's going to be centrally controlled and managed by procurement, but there's always going to be some categories of spend for which it doesn't really make sense. I'm curious, is there a certain dollar threshold below which sourcing would not be engaged? And if it does fall below that dollar threshold, what processes or controls are in place to ensure that if stakeholders are going through this process on their own, that they're buying from approved vendors or obtaining competitive quotes on that particular category of spend?
Yeah, that's a great question. I think right now, our organization is actively looking for EBITDA improvement, and they're really relying on procurement to deliver that. So right now, we are looking at any requisitions 10K and above to be going through a buyer's desk or a sourcing activity so that we can extract as much value as we can. In regards to anything that's lower than that, we're trying to institute more catalogs, have the users have a better user experience, and then we're really relying on the managers to manage that spend and make sure that they're making the right business decisions for the organization. Now, as soon as we get more information that goes through those catalogs are static, they're static catalogs, we'll reevaluate, whether it be on a quarterly basis, annual basis, whatever makes sense, to try to understand what the behaviors and patterns are of our constituents and see if we need to develop more content to make sure that we have more spend under control. I think, unfortunately, you have to go through a little bit of that experience and that buying behavior to understand patterns. You can develop the appropriate strategy. Again, you really do need a system to observe that behavior and develop that strategy.
Yeah, what you've shared, Af, I've seen that as a fairly typical situation. There's some threshold, 10,000. Some organizations it may be 25 or even 50, but there's some dollar trigger that says below that, end users are on your own. Certainly one of the best practices is to drive them wherever possible to electronic catalogs with the approved contracted pricing for those particular needs. Now, of course, there are some items that need to be sourced, and I just wanted to share on the next slide another best practice in addition to electronic catalogs is on occasion we need to make stakeholders the equivalent of a sourcing professional. We can't expect them to go through a complex sourcing process, but if they can't find what they need on an existing vendor catalog, they may have to go out and get 3 competitive quotes to still make it a compliant transaction, even when it's below that dollar threshold for procurement. So one of the tools here, a quick sourcing tool, says, if you can make it easy enough for an end user stakeholder, a non-procurement user, to, on a single screen, create a very basic RFQ, be able to invite new suppliers on the fly just with an email address and get this kind of a quick bid response back where I can compare side by side the 3 competitive quotes and make an award, then you're applying some rigor and some process and control even to those tail spend categories for which it simply doesn't make sense financially to have a category manager assigned from a procurement standpoint. So just another best practice there. So next slide, please. Yeah, we wanted to segue then into regulatory compliance. So again, we're going to move from the internal focus of spend compliance to an external focus. And we've talked about, we got a laundry list of regulations here. GDPR, the general data privacy regulation. If anybody's gotten a slew of emails lately, talk from someone who's informed them that they've changed their privacy policy, the GDPR has gone into effect. And that's just one regulation PII compliance in particularly in the healthcare relate to patient information and privacy of information. You've got Sarbanes-Oxley and Dodd-Frank around, the financial regulations and conflict minerals, Reach and Rojas, Foreign Corrupt Practices Act, OFAC, the suppliers that are on the watch list. So this is probably not even exhaustive, but it's just indicative of the number and types of different regulations, which seems to be on the increase. So once again, in your environment, Af, what does the regulatory environment look like? Which of these have kind of the most impact, and what are the consequences of noncompliance?
Yeah, and that's a great question. So I kind of alluded to a little bit of those other compliance stuff that impacts us, but I'll focus on GDPR for this conversation. GDPR is a very hot topic. It's really the way that your organization manages securing data, especially in the European environments. It's been putting our legal team working and burning the midnight oil to make sure that we have a process in place. I'll tell you, we didn't have a procurement solution that's completely launched, and we don't have visibility to all of our suppliers. We don't know which suppliers manage personal information, and if you don't have spend analytics contracts, you are setting yourself and your organization up a big problem.
All right, so technology is certainly one of the key ingredients to getting a handle on this, challenging and rapidly changing regulatory environment. So, on the next slide, I want to transition into the area of process compliance. And again, this may have multiple facets within process. And one is, everyone's talking about digitization of the business too. So, from a process compliance standpoint, more and more for an organization, a compliant transaction equals a digital transaction as opposed to a paper-based transaction. So here's some of the benchmarking data that comes from Hackett that contrasts, top performers with the peer group overall across each stage of sort of the transaction life cycle, starting with the requisition and ending with the payment. But I'll just focus on a couple of the most critical procurement transactions, if you will, the PO and the invoice, and just highlight a really huge gap, this massive disparity between top performers that are generating 85% of purchase orders electronically, not just generating, but dispatching or delivering them electronically, and also 79% of their invoices. And the chasm here is, that's 52% more of the PO transactions and 51% more of their invoices electronically as compared to the peer group overall. So thinking about your situation at Belden, Af, before you initiated, and I know you're on that journey right now, but moving towards a digitized process, what would you say that the starting point, what was the level of automation, and how have you tried to set your goals for really digitizing the business?
Yeah, so I think it's different for each business unit. We have about 10, 15 business units at the organization. So some organizations were a little bit more robust than others. Some of our organizations has a system. We're using it more as a workflow approval rather than a full kind of compliance procure-to-pay perspective. So I would say if you were to take a high level, 15% was digitized in some way, and I take this apart in two ways, right? I think I look at the perspective, and a downstream would be like the contract management, the sourcing piece, and then the downstream, which would be the accounts payable. From an upstream standpoint, your state, looking at 80% trying to get solutions set up, and on the pay side, we kind of have another working on that. Right now, it's a very technical process. And they're starting their journey as well, trying to figure out a way to automate payments so that our systems can talk to each other and we can have a very efficient way of managing that process.
Okay, and especially when you get to that downstream, the invoicing and payments, digitizing this process means not just what you do within your organization, which the more internally focused is the requisition to PO perhaps, but getting the back end digitized really means enabling suppliers effectively as well. So be curious to see how are you approaching supplier enablement and compliance with your digitization initiative. So are you expecting suppliers to receive a PO electronically and return an invoice to you electronically as well? And as we go to the next slide, so we started...
And before we do that, it's time for the second secret word, purchase, P-U-R-C-H-A-S-E, purchase, secret word number 2. You're going to need all 3 to get your credit, so please jot down purchase, which is the second of 3 secret words. Richard, take it away.
Absolutely. So process compliance, we talked about digital versus paper. Another aspect is our requisitioners going through the preferred buy-pay channels? Are they buying from the preferred vendors in the prescribed manner? And again, just going to use this data from the Hackett Group to illustrate the magnitude of the disparity between the top performers, the best in class, and the average overall. So top performers are more than 3 times more likely to say we are very effective at driving requisitioners to preferred buy-pay channels. So effective at doing something that we'll call guided buying. So the next slide, I just wanted to kind of share an example of what we mean by guided buying. How does this really work? So from the perspective of a requisitioner, I'm going into the procure-to-pay platform, and all I know is I need a screwdriver. I don't need to know what the actual correct nomenclature is from a category or commodity standpoint. So I don't need to know that, for instance, that it's properly classified as a hand tool or a power tool. I think of it as a screwdriver. And again, this is where artificial intelligence can really take over. So it can auto-classify based on my natural language search term to apply the correct category. And building that intelligence on the front end of the system then allows the system itself to say, for that category, you have 2 preferred contracted vendors. So you can compare their products from, in the catalog, but it's going to drive the user to that preferred vendor and preferred buy-pay channel, and also default on the end user's behalf the correct category and commodity code, and also invoke the appropriate category-specific approval workflow. So you've taken all the guesswork out of the process for the end user about who should I buy from, how should I buy, and how do I account for it. So that really is a way to more effectively drive process compliance. On the next slide, I'll talk about one other aspect of this buy-pay process of process compliance, if you will, and kind of dispel the misnomer that, I think for a long time has been out there that there's only one way to handle a procure-to-pay transaction, at least at the end of the process, which is we need to do a 3-way match of the PO to the goods receipt and the invoice. And this data from Hackett, I know it's a lot of detail here, multiple swim lanes, but basically this says that the top swim lane and the bottom swim lane are not necessarily the best practice. The top being the traditional 3-way match certainly applies for a large percentage of transactions, but in some cases it's overkill. In some cases, the amount of additional cost and effort associated with a 3-way match doesn't necessarily warrant, that level of control from a risk or exposure standpoint. Of course, the swim lane on the bottom is no man's land. Nobody wants to be in the position of a no PO invoice showing up, with no control on the front end at all. But in the middle here, what this really says is that there may be certain categories for which a 2-way match can provide the appropriate balance of control with the value derived from that oversight. So just curious at this point, Af, what's your position on the traditional 3-way match, and do you have any exceptions, like assumed receipt shown here, just a match of a PO to invoice, maybe on low dollar transactions, or evaluated receipt settlement, just the PO and the goods receipt maybe for inventoried items. Any exceptions in your business, and how do you set up approval rules for different types of purchase processes?
Yeah, so we have three-way matches on goods, not services. And I think you're right. Too often we try to follow this three-way match, and it may not make sense. We were doing three-way matches for a situation, and what we ended up finding out is, especially on the services side, we would basically be late for payment. We couldn't match a payment, so we'd go and talk to a payable person and say, go to SAP, ERP, close it out. We didn't even know if we received services or not. We would just check a box. Rather than waste time doing that, because it's not value add, just a box, we figured out what works best for organizations is for services, we do not have a three-way match. Goods, we do. And again, it depends on how your organization is set up and how you're comfortable and how your audit firm feels what you need to do. So it's going to be unique to all different. It's going to be unique to every organization on what makes most sense for them.
Perfect. Thanks, Af. And on the next slide, just a quick example. If I'm going to implement this type of an approach that says I have multiple different buy pay channel processes depending on the dollar amount or the type of category, is it a product or service, those kinds of things, then I need to have the flexibility and configurability in a workflow tool to be able to create multiple workflows. So just an example here of a drag and drop workflow configuration to be able to put those business rules in place to govern the flow of the process, and again, mask that complexity for end users and actually give them visibility into the the status of their requisition and what the different approval levels on the chain their requisition will follow before it gets approved. So moving on, let's talk about contract compliance on the next slide. Again, some different factors here with we'll go to the next slide on contract compliance. Yeah, so legal and compliance from a supplier standpoint, compliance with commercial terms and utilization and performance. So next slide, we'll highlight then those legal components. This really gets to the aspect of, do we have the right clauses and protections in the agreement? Have we been able to establish version control over the documents, the chain of custody, who has to approve, and the contract hierarchy as well. So in your environment, again, Af, how does procurement work with legal to make sure that contracts are compliant, and what kind of oversight exists for contract review, as in who needs to approve?
Sure. So I think right now this is a great place for us as an organization, because historically there's been a lot of folks that have been going rogue and not going through the right channels. Now that we have a system, anything that is over a certain threshold, and I forget what the amount is on the top of my head for legal has to review, and anything that has personal data, legal has to review. There are a couple of different workflows that we've developed collaboratively with legal in regards to what items they need to see before their requisition. And since we have an automated process now, they're able to get visibility to that before we sign on the dotted line and get contractually obligated to follow through things. So developing those workflows, not just legal, but making sure finance is involved, is really important for us. And we now finally have a process that makes more sense now.
That's terrific. So from a legal standpoint, we can make sure that we've got the protections we need in the agreements. If we go to the next slide, I'll just highlight a couple of ways that especially contract management technology can help really make sure that contracts are being utilized effectively. So you can track, with the stoplight metaphor here, if a contract is close to coming up to being exhausted in terms of the dollar value, and in the yellow and red, maybe it's already oversubscribed and needs to have a PO amendment issued. Or in green, you can track the level of utilization and particularly pinpoint underutilization that may be a symptom of maverick purchasing going on. Someone's buying from other than the contracted vendor. Likewise, using the tools to set up performance and milestone tracking, especially for a variety of statement of work kind of services agreements. It may be less about, delivering a widget and more about deliverables on a consulting engagement that occur over time. So just a couple of highlights there. The next slide, just talk about being able to, again, use the technology to track, is the supplier complying with the core commercial terms of the agreement? So in every case, are they giving us the contract pricing at a line item level? That comes back to having the spend data. Are they complying with negotiated payment terms? Are we getting invoices that, are 30-day terms when we actually negotiated 60-day terms? And likewise, the other challenge that many organizations face is, I've got all these agreements out there. I don't know when they come up for renewal. Can the system give me an alert? So here you can set alerts and reminders to get those triggers well in advance of a renewal date and prevent, the auto renewal or evergreen type agreements that you didn't intend to renew from coming up again. So take me to the next slide. So I want to talk about the supplier management onboarding. So this is just a quick diagram of the onboarding process, and the best practice here is get the suppliers through a self-service portal to upload more of their documentation and complete a profile of information, but then go through a robust vetting process to verify that information, an approval workflow to make sure that suppliers are appropriately approved before they're onboarded. And so within the context of this model, Af, what process do you follow to onboard suppliers, and how do you ensure the integrity of supplier data, especially in this era of, self-provided or self-provisioned supplier information?
Yeah, that's a good question. That's a hard question to ask, because I think when you try to systematically have suppliers get onboarded, you're probably you have to. It's not as simple as inviting a supplier and saying, go on board. Before you allow someone to get into your system and part as a qualified supplier, you really need to do a little bit of due diligence, either through Dun & Bradstreet, reference calls, things of that nature. I don't think we can get into the habit of thinking, well, we have an automated process, we're going to let any supplier come in without doing that due diligence first, because you're just going to kind of expose yourself to some problems in the future. So we really do have those conversations ahead of time before we give an invitation for people to self-manage, and we also give them the opportunity to provide more detail to us. What I mean by that is, you may be talking to a supplier about one particular category, but through supplier onboarding, you can basically allow them to present what other categories that they work with. So then when you are developing your content, or when your constituents are looking for procure buying, they can go through these suppliers and say, oh, well, these guys do more than just what I typically have looked at them for, and you can, again, leverage off of those relationships. But I do think you still need to make sure that you're doing the due diligence. Even if you have an automated system, you just don't want to have your hands off of that approach.
Excellent. I recognize time is short, so if you'll advance me 2 slides, I want to.
And while we're doing that, let's do the third and final secret word: contract. 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 Third and final of the secret words. Thank you for your attention to that. Please fill out the survey you're going to get, and you'll be on the road to getting your credit. Back to you, Richard.
Excellent. Thank you, Sal. So I want to talk about corporate social responsibility and sustainability as well, and that falls into the areas of economic development, which means responsibility to the shareholders to be a going concern, a profitable company. The social responsibility to the public at large, and the aspect of responsibility to the environment overall. So in a survey of multiple companies across industries, the main objectives of corporate sustainability strategies are, in fact, not necessarily altruistic objectives. They're good business reasons and drivers. So 88% say we want to make sure that we stay out of trouble, comply with regulations, that we stay profitable, reduce costs, improve profitability, better manage risk, all those kinds of things. So I think it makes the case that good social and sustainable practices are good business practices overall. What's your business strategy for CSR and sustainability, Af?
Yeah, all those items are pretty important, but I'll hone in on something that's specific and more current to us. So you may have seen some news about Belden really trying to combat the opioid crisis. And one of the things that we're doing from a staffing perspective is we're making sure that when we're recruiting people, we're working with organizations that are giving individuals who work on our manufacturing plant the opportunity to do some rehabilitation if they fail drug tests. I think at the crux of it, an organization has to really treat its people right, and we have to work with suppliers who treat folks right. And so that's really a big focus point for us, and it's brought us in the news recently because you're only as good as the people that work for you.
Excellent policy, and again, I think shows how it can benefit both the bottom line and society overall. So I want to go ahead a couple slides too to hit on the last point, last facet of compliance here, which is the actual business case and return on compliance. So if you go ahead and go to the next slide for me, and please advance, and advance again, please. Yeah, I want to kind of put the exclamation point on our discussion here. So we talked about multiple facets or aspects of compliance from a procurement standpoint: spend, process, regulatory, contracts, supplier, and the CSR or sustainability area that we just discussed. But at the end of the day, there has to be a business case for this return on compliance. So I'll just share one example here. At a relatively low level, let's say $100 million in spend, by digitizing the process to drive greater efficiencies, by increasing the volume of spend that's compliant, that is, it's with the preferred contracted vendor at negotiated prices, in addition to a variety of other benefits to the organization, less cost in terms of responding to external regulators and auditors, better data transparency and visibility. There's a hard dollar benefit here that in this particular example, somewhere close to about 3% of spend. So for most organizations, many of which might have much more than $100 million in annual spend, a 3% savings is going to be a dramatic bottom line impact.
I want to give you the opportunity here, Richard, to just take a minute to just sum up for us some key takeaways for you before we close out.
Absolutely. Thanks, Sal. Yeah, I think we've covered a lot of ground here and really, I think, made the case that there are many dimensions to compliance as regards the procurement process and the procurement function. All of them have key impacts to the business, some of which are quantifiable, some of which are not. But in any way, shape, or form, there's a dramatic return on investment for a compliant procurement organization. And I think the best practices that we've shared certainly include a number of aspects of the right process design, the right organizational structure to go after it, but more and more the differentiator that we've shown, and we've shown this huge disparity between what top performers are achieving and what the average level is. More and more, the biggest differentiator tends to be the level to which they've embraced technology and digitized the business. So getting to that next level of efficiency and transparency in the organization has become the key competitive differentiator to help those top-performing organizations achieve the maximum and optimal levels of compliance and to really enjoy the benefits of lower costs, higher savings, the return on compliance that we promised at the start.
Af, would you like to complete your final thought? By the way, Richard Waugh, thank you very much for that summation and for your presentation today. Af, did you have something you wanted to add, because we are running short on time?
Yeah, I think it's the 2 to 3% is actually quite low. I think all organizations like the Hackett study would say that that's quite low from a hard savings standpoint, and it's very easy to quantify, right? It's the spend that you're able to see and manage, what you've negotiated, and what the delta is. From a soft cost perspective, I think it's a little hard to quantify, but it makes a lot of sense. When you're developing strategic categories and you're taking a lean approach at managing those categories, you're going to have some efficiency. So, for example, if that multifunctional device example I gave earlier in the conversation, instead of having 10, 15, 20 contracts for multifunctional devices, you're having legal review one master service agreement, SLA, things of that nature. So you're focusing less and using less of their resource on tactical stuff and allowing them to focus on more value-added stuff for the organization. It's just a much more lean approach. You're using less time for people to put requisitions on paper and email, and it's more of an automated process where it's becoming systematic. You're freeing up more time for people to do more value-added activities.
And with that, we would like to thank our speakers and attendees for carving time out of busy schedules to help make this event a very successful one. And if you're applying for continuing education credits, the survey is mandatory. Your state bars and boards require that we maintain a completed survey from each attendee. And now, ladies and gentlemen, this concludes our event for Procurement's Return on Compliance, what it takes and what it's worth to implement compliant procurement. If you have a question for one of our speakers, just send an email to info@theknowledgegroup.org, or you may contact the speakers individually using the information provided in your events materials. And if you can't find that contact information, just send us an information request via email to info@theknowledgegroup.org.